Datadog is down 3% year to date, and is this a good time to buy Datadog for a long-term position? That's the question we will explore in today's video. We will go over the fundamental analysis, we will do a technical analysis, and answer the question, is this a good time to buy Datadog? And what am I doing for Datadog? If you enjoyed today's video, make sure you give us a like, and without further ado, let's dive in. Alright, before we get into the nitty-gritties of fundamental and technical analysis, let's understand what Datadog does. Let me try to explain you in one simple sentence. Imagine a company that has many software. So they have a Salesforce software, they have an Adobe software, they have tons of other softwares doing so many different things. How do you manage those softwares? You need to have some kind of a monitoring tool to see how each of those softwares are operating. This is a very simplistic way of explaining. Datadog helps you to monitor these applications. If you look at the definition of what Datadog does, they help you in infrastructure and application monitoring, log management, digital experience monitoring, continuous profiler, database monitoring, and so many things that they let you do. And now also they have launched a lot of AI capabilities within their application to help automate a lot of these tasks. We'll touch upon that a little bit later, but just understand it is a very complex software. However, they have made it very simple for organizations by offering different tools to monitor different types of application. At the time of this recording, the stock is trading at $117.84. In the last 1 month, the stock is down. It's basically flat, and year to date, the stock is down 2.92%. So let's say evenly 3% down. The 52-week range of this stock is between $77 and $139. Forward EPS is 1.56 and the forward PE ratio is 75. So you could say that this stock is trading at very high valuation, and that is one of the reasons why you see a lot of Seeking Alpha analysts have put a hold rating. We'll also touch upon the ratings from Wall Street on how are they seeing the stock in the next 12 months or so. Looking at their last quarterly earning, they beat their EPS by 9 cents. They beat their GAAP EPS by 8 cents. They beat their revenue by $19.56 million. For the upcoming quarter, their EPS is expected to be about 36 cents and their revenue estimate is about $624 million, which will be higher than what they brought in the previous quarter. Most of the times, I always take a look at the earnings history of a company and see how they tend to report. This is pretty much a picture perfect where they have not missed a single EPS and they have not missed a single revenue. And the last thing that you want is company giving you surprises on the earnings call without notifying ahead of time what the company is going to see. So this is a good sign from an analyst standpoint as well as from an investor standpoint that you can trust companies' assessment of how things are progressing from an earnings standpoint. Let's jump into the investor presentation that they presented in May. Datadog helps you solve a lot of complexity by providing you a simple solution to monitor everything. This is one of the most important slides and often overlooked by investors. Why? It's because when you are working for a mid-size or a large-size company, you will notice that companies generally operate in silos. So one department might have their own tool to manage things or monitor things. Whereas when you deploy solutions like Datadog, Splunk, Dynatrace, etc., which are into this space, they are one product, one platform deployed everywhere. So now everything is connected to one data source. And this is what is important. So these are different features that Datadog offers. So you have product analytics, cloud service management, software delivery, cloud security platform, digital experience monitoring. This is very important. I'll touch upon this a little bit later. Log management, APM monitoring, infrastructure monitoring, and real-time unified data platform. If you are going to be investing in Datadog, you have to take a viewpoint of 5 to 10 years from now because this is going to be a long-term investment. And what they are saying here is that the cloud spend continues to grow rapidly. So there are companies that were born in cloud, and then there are companies that are moving to cloud. There is a big chunk of population in the enterprise space that currently still has stuff on-prem. So they are slowly moving towards AWS, Azure, Google Cloud, etc., etc. But there are companies that are just born in cloud. So everything they do is on cloud. So overall, what you're seeing is that the trend is moving towards cloud, and the IT spend will continue to grow. So look at the left-hand side, the cloud spend Currently in 2024, we are around the $600 billion mark. By 2027, it's expected to double to 1,200 billion. Currently, as of the last reporting period, Datadog has approximately 28,000 customers across the world. This is not a small number to sneeze at, but what is even more important is that you have over 3,300 customers paying 100,000 or more. Now, if you follow the SaaS space, you will notice that most of the SaaS companies, they report how many customers they have that pay over $100,000 on an annual recurring basis. This is a very, very important metric. And this is, if you invest in SaaS companies, you should always track this number. Some of the financials on the left hand side, you can see that they had a 26% trailing 12-month year-over-year growth, which is in the double digits, and that's what we want to see. Platform adoption, you can see that 82% of the customers use 2+ products, and then as the number of products increase, 4+, you have 47% of the customers, 6+ products, 23%. So you are seeing that the more products this company continues to offer, and you see increased adoption, that will help you increase in the revenue side. And once companies start to use more than 2, 3, 4 products, they get embedded into your ecosystem, and then changing a vendor at that point of time becomes a big undertaking for organization. Right now they operate only in 33 countries across the world. There's a lot of potential for this company to grow in the coming years, and as the cloud spending increases, companies will require softwares like these to be deployed in their ecosystem. Another important number is how many customers they are acquiring quarter over quarter. So first quarter 2023, they were at 25,500 customers. Now they're 28,000 customers. Definitely great growth over here. There are 396 customers that pay Datadog over $1 million every single year. That number grew from 317 customers to 396 customers. Another very important metric that you should keep in mind and always track on how the customers, and that will only happen if the customer starts to use more products, because now they'll be start to spend more money on each of different products that they are acquiring from you. How can we not talk about AI? And this is a very important piece that they talked about, the AI here. Announce the general availability of IT event management in addition to our suite of AI ops capabilities. With event management, Datadog Intelligence consolidates, correlates, and enriches event alerts from Datadog and third-party tools into one consistent view, so teams can get the full context of incident and can proactively discover, understand, and resolve issues. As they start to integrate more and more AI features within their platforms and different products within their platform, they will be able to start to take advantage in the coming quarters and years on the AI boom. Year-over-year growth 27%. For every SaaS company, gross margin is very important. They are staying above that 80% mark. They are 83% in 2024, trailing 12 months, 82 in 2023. Their operating margin has been improving as well. As you can see, from 11 to 16 to 19 to 23, now they're at 25%. So this is on the correct path. The free cash flow has improved from the 2022 354 to 598 in 23, and currently they are at 668 million. So these are a couple metrics that you should always keep in mind when you are trying to look for companies that you want to invest in, especially in a SaaS space. Gross margin, operating margin, and free cash flow are very, very important. Moving on from the financial standpoint to the analyst rating, we did not see much changes after the reported earnings, and pretty much the only thing that came out was from BTIG. They assumed the rating change to be neutral. Currently, we have about 23 strong buys, 10 buys, and we have 10 holds. So there is really no sell rating on this current stock. There is an estimated price target, an average price target of 146, which could get you an upside of 24%. Price targets are a good measure, but doesn't mean that that's set in stone. You can clearly see that generally the price target and the price are never correlated. So always take these price targets with a grain of salt. If we draw a trend line, we can see that the stock is trading, has been making lower highs. And by drawing this channel, I kind of see that the stock is trading close to the upper end of the channel. Now, if you draw a Bollinger Band, which I generally don't use, you will see a similar trend, that it is above its midpoint. So not at the top of the range, but above its midpoint. From a volume standpoint, also you do not see much volume at these levels. The next big volume shelf is between the $107 to $110. That's where most of the buying is happening. If we zoom out a little bit, 2 earnings prior, we had this big gap up. And since then, this stock has not done any gap fills. Generally, when there are gap ups or gap downs, at some point in time, those gaps are filled. Sometimes it could be immediately. Sometimes it could take few quarters or even few years for those gaps to fill. Are we going to see a gap fill here? Because this gap is a pretty big gap. You have between $84 and $96. That's a big gap. And the stock is currently 117. If the stock falls from its current place to all the way going to 84, that is going to be a 30% drop in the stock price. Do I think it's going to happen? I don't know. Nobody can predict that on how the market will perform. But if you are going to be investing in Datadog, I think you need to track the levels. If the stock respects the trend channel, we could see something like this, where the stock hits this upper trend, goes down, comes back up, goes down, and then you will start to see the stock coming into this range, in this gap fill range. You are going to be investing for a long term. Start your tranche somewhere at the bottom of the range. So you would want to be in this $105, $110, where you could start to open a position but not go all out, because what you would really want to see is if this stock respects its trend and starts to come in this gap fill range, this is where you would want to start to buy more of Datadog. But here's the problem in stock market: nobody can predict how the stock will behave. There are no additional catalysts coming for this stock until the next earnings report, which will be in August, about 2 months from now. So until then, we could watch this trend play out, or based on that earnings, we could see a sharp decline in the stock price and the stock comes back in this buy zone. If you don't want to wait until then you have an option, no pun intended, to play options. One idea is to keep a weekly options here, where you can be a little bit more conservative, maybe have a 20 delta with 114. You might get $50, $52. If you are willing to take more risk, you can sell at the money put. If it gets assigned to you, you can sell at the money calls to continue the wheel strategy. Or if you want to acquire the stock long term, you can look at further a monthly options put here. You can look at 110, where you are also hedging yourself down in case you have a drop from 117 to 110, right around the earnings time frame. The implied volatility will also shoot up, and you can even take advantage of in that range of $90, where you can start to sell a put here for $64 to $70 you will get here. If you are going to be selling at the money puts at these levels, your premiums are pretty high and the delta is also pretty high. So 110 delta for 16th August, which is 60 days from now, you will make about $435 at the time of this recording. There are a couple ways you can acquire Datadog stock. What do you think about Datadog? Is it a good time to buy Datadog? Well, in my opinion, that there are opportunities that Datadog may see for the downside based on our technical analysis, and we saw those big gap ups, and that may eventually be filled out as we go through it. Currently, most of the companies, this whole AI revolution, companies are in this space where how do we monetize the AI features? Because there's a lot of CapEx spending happening by not just these software companies, but also by organizations who are buying these softwares. So now once they know that they're going to spend a lot of money on the AI, how are they going to be using the AI to generate revenue? This is the time period where all these companies are thinking about these answers. So until that becomes a little bit more clearer and companies are starting to adopt and start to generate revenue through AI, we may see a little bit of a period of uncertainty where these stock prices are down. I love this stock from a long-term perspective. It is part of my long-term portfolio, but we could see further downside until we get that direction. So what do you think about Datadog? Do you think Datadog is going to fall further down, or do you think we will eventually see new highs in Datadog? I would love to know your opinion. Put it in the comment section below. If you enjoyed today's video, make sure to give us a like, click on subscribe, and ring the bell notification. I will see you next time, Investor Family, but don't forget to invest for tomorrow.